DuPont innovation lowers LCOE by increasing cell efficiencies and system lifetime while reducing total system cost. Materials matter.
Hello and welcome to the last PV Tech Newscast of 2012. This week we look back at a year of change and ahead to a brighter horizon. Coming up, 90% of Chinese polysilicon producers stop production. Chinese dumping labelled poison to European solar market. And IHS expects solar industry fallout to peak in 2013. Overcapacity, weak demand and uncompetitive production have forced almost 90% of polysilicon producers in China to suspend production, according to news reports out of China. Only a handful of producers still operate plants, but at low utilization rates. GCL Poly, Daqo and Asia Silicon are continuing production despite spot market prices at or below production cost levels. LDK Solar, which had a total of 17,000 metric tons of annual capacity, recently closed down all its polysilicon production. Chinese polysilicon producers have been impacted by a rise in imported polysilicon from the major producers in Europe and the US. Reports cited that imported polysilicon had increased 26% since the beginning of the year, while ASPs were approximately 61% down from a year ago. Chinese authorities are investigating imported polysilicon from major producers such as Hemlock, MEMC and Wacker as the PV trade wars drag on. There's growing concern that Chinese authorities will impose on poly imports into China. As the trade war continues, EU ProSun President and Vice President of SolarWorld, Milan Nietzsche, has described alleged Chinese dumping as poison to the European solar market at a debate in England's House of Commons organised by the British Photovoltaic Association. Although no Chinese delegates were present at the meeting, the opposing argument was represented by Gregory Spanodakis, President of Canadian Solar European Operations and Chairman of the Alliance for Affordable Solar Energy, which maintains the Chinese are not illegally dumping. Spanodakis argued that constructive dialogue between the parties was needed so that the various government agencies can see the willingness of the parties to work together to find a solution. The highly volatile PV industry is notoriously difficult to predict, yet that's not stopped market research firm IHS in providing its key 10 predictions for the industry in the year ahead. Starting with its market forecast as the priority pick, IHS has said that it expects double-digit installation growth in 2013, which PV Tech estimates would see installations in the mid-30 gigawatt range. However, due to falling prices, continuing global industry revenue is expected to continue to decline. The market research firm expects 2013 revenue to be close to $75 billion, down from a forecast $77 billion in 2012. According to IHS, industry in 2011 revenue peaked at $94 billion. Further doom and gloom is expected as the industry solar shakeout continues, yet this should reach its peak in 2013, as the market research firm expects fewer than 150 companies to remain in the upstream supply chain. Specialist PV equipment supplier GT Advanced Technologies is to exit the directional solidification system market due to market conditions that are not expected to recover sufficiently to justify continued investment in the sector. GTAT, which is one of the largest PV equipment suppliers and clear leader in the ingot growth systems market, would remove the majority of its DSS furnace equipment from its backlog and take a total write-down of its DSS operations of approximately $140 million. Finlay Colville, Vice President of MPD SolarBuzz, said that perhaps the biggest question from the DSS bookings reset is not related to GTAT activities, but to Meyer Burger. The backlog from Meyer Burger at the end of Q2 this year was still way above industry norms, and many of the customers that GTAT had on backlog for DSS furnaces would have been wire saw customers for Meyer Burger. The exit from the DSS market also raises issues over the possible industry migration to quasi-mono wafers. Japanese renewable energy capacity has reached a total of 1.443 gigawatts, according to figures released by the Japanese Ministry of Economy, Trade and Industry. From the 1st of April till the 30th of November this year, solar PV accounted for 1.398 gigawatts, an increase of 272 megawatts from the previous month. The Japanese residential sector is the most developed with 1.027 gigawatts, while the non-residential sector installed 371 megawatts. Last week, Japanese mobile phone company SoftBank announced the launch of a new PV program which seeks to install PV arrays on 1,000 residential rooftops in Japan. And finally, UK-based dye-sensitised solar thin film manufacturer G24 Innovations has sought protection under administration. There have been numerous corporate failures within the PV thin film sector in 2012, and especially within the flexible thin film category. The most recent victim has been Global Solar, although Konaka, VHF Technologies FlexCell, and largest firm Energy Conversion Devices all succumbed to bankruptcy in 2012. In a happier twist to the story, it appeared only days after the company went into receivership that a group of unidentified investors swooped in and protected the majority of the 40 jobs at risk. And on that more cheery note, it's time for me to say goodbye, as that's all from us and the PV Tech Newscast team in 2012. Season's greetings to you all, and here's to a prosperous new year.